The stock market made some pretty substantial losses last week. Is this setting up for a September or October stock market crash? I will show you what to look for, plus do my regular weekly market analysis. We're going to look at the day trade of the week and run a market scan in search of small cap stocks that present good opportunities. It's all coming up. Historically, September is the worst month of the year for the stock market, and we can all recall those big crashes that happen in October. With the weakness of the market in the last week, I think it's easy for anyone to think maybe another crash is coming. Well, what are the telltale signs of a crash? The key thing is to look for a break of the upward trend line. Now, we've talked about this many times, but it is as simple as drawing a line with a ruler across the bottoms of a market chart, like the S&P 500. If you get a break of that line, that is the first step toward the sellers taking control. Now, typically, a crash, as opposed to just a market pullback, comes on the heels of a surprise event, something that the market doesn't anticipate. So if we were to get a surprise break of war or something like that, or if a virus really started to get momentum and shut down the global economy again like we had a year and a half ago, well, those are those surprises that are the catalyst for a major crash. Now, we haven't seen that yet, but we are testing some support areas on the chart, that upward trend line of support. So here's a chart of the S&P 500. This is the daily chart, and you can see the weakness of the last week or two right there. In the context of this long-term trend, we're still okay. We're bounced off of this trend line a few times, and we're basically at it right now. The other thing I want you to notice is that this is coming after the achievement of a high. Typically, breaks of trend happen after the formation of a falling top. So if we were to break down through that line after the formation of a falling top, then we might see more weakness either later in October or September or into October. That hasn't happened yet. Certainly the weakness of the last week makes it possible that it will happen, but until it does, don't get too worried. Just now you know what to watch for. Look for a break of the upward trend line, ideally after a falling top, as a clue that the market's longer term upward trend, which has been great for a long time, is finally going to succumb to some profit taking. All right, let's get into this week's market analysis, starting off with the US markets. And here you can see the short-term chart of the S&P 500 kind of went parabolic to the downside. We tried to break here, couldn't break the linear trend line, however, came up to it, got stuck, rolled over. We're fairly oversold coming into Monday's open, as we are quite far below that high point. So not a real concern. I think early next week we should bounce. And when we look at that longer term weekly chart, we're at the point where we should bounce. We need to bounce, or we'll have to get a little more concerned. So definitely something to watch for, but there is no real breakdown yet. Now, just incidentally, if you go back to when the COVID crash started, that was right here. There you can see that upward trend line was broken. It surprised the market with a break of the upward trend line, and then of course we had that very sharp sell-off. Well, we haven't quite broken the upward trend line, certainly not a lot of enthusiasm, but there was a little pickup in volume last week, so we'll keep an eye on that. Stockscores are still in healthy places, well above 60, but starting to dip a little bit. That's why we're showing some concern now. All right, NASDAQ 100, no breakdown here as well. The upward trend is still intact. The Russell 2000 has been stuck in a sideways market since February. The Russell represents small cap stocks, and this week they held up better than the large caps. And so we may see some money coming back to the small caps. I've noticed a pickup in trading action a little bit in the last little while. Certainly not a hot market by any means, but things are starting to get better on that side. Canadian markets, there you can see the same sort of weakness on the TSX the past week or two, coming into support where the market should bounce. In the context of that longer term trend, the trend is still intact. This is the 3-year weekly chart, and it's still okay. The TSX Venture, really in sort of a pessimistic market. You can see the falling tops there, building towards a flat bottom. If we were to break down through that, that would be a breakdown from a descending triangle and point to a possible move down into this region. Hasn't happened yet, but I would be cautious with the TSX Venture stocks. On to currencies. US dollar had a decent week, getting some follow through from the little breakout 4 weeks ago, and I'm still fairly optimistic on the US dollar. Bitcoin is struggling with that downward trend line of resistance. You can see it hit it and fell back. Now we managed to close above the open this week, and maybe we'll take another stab at breaking that downward trend line. But until we do, I'm going to remain sort of neutral to slightly negative on Bitcoin. Ethereum also stalling underneath resistance. Its chart is better than that of Bitcoin. And so if you were looking for something to watch, I would focus more so on this, but at this point, still nothing to get me too excited on Ethereum. Commodities, you can see gold had a pretty strong week to the downside. It gapped down on Thursday and is now starting to test some support. So I'm a little negative on gold right now, not extremely so because it is above some support, but that weakness last week a concern. Oil has managed to rally back the last few weeks and is now coming into this resistance zone. Probably stall there, but if we can break out, then the next resistance is up here. So not a lot of upside, but still I think it is one of the better sectors of the market. And finally, the fear chart, a little blip higher in fear, but given how much the market fell, I would have expected the VXX to rise more, and it hasn't, and that tells us that fear isn't really a big concern in the market. All right, so then my ratings on stocks, both US and Canadian, neutral on both time frames. On gold, neutral on both time frames, but a little cautious short term. Oil, neutral long term and bullish short term. Stocks have fallen significantly last week, but they are at support, where a short term bounce back is likely. That's horizontal support on the short term charts, but also long term support on the weekly charts. So we should still be cautious with owning stocks. This is the fall, as support could be broken, which may then lead to more weakness. Now the good news is fall weakness is often followed by the real strong period of the market, which begins sometime in October and goes until May. And so we're right on the cusp of that strong time of the market. So really keep an eye out for that. Gold had a little breakdown last week, and that could cause it to break longer term support. Keep an eye on that. And oil is relatively stable. All right, so this week we always, as always, we're going to look at a day trade of the week, an example of a stock that we focused on in our active live service on Stockscores. You can learn more about that in the trader training area of Stockscores.com. We always look for abnormal activity. Something called an action candle is my proprietary indicator. You can see on the chart here, all the action candles have pink dots. And what we look for are the pink dots that break from low volatility. Now in this case, CRVS made a large gap to the upside. I don't like chasing gaps. So in that case, we wait for a second signal. We wait for the stock to come back up to the top of that action candle, go sideways for a little bit, and then break out. And that's what happened on CRVS. It also made a break from a pennant pattern, which is another strategy I use called a superhero right here. And then it had a pullback play here for a run into the close, a little pullback play there as well. So there was a number of trade signals on CRVS. Now, because this was a very volatile stock, the economics made really good sense. For every $100 of risk that you want to take, you would purchase 760 shares. That's just under $3,000 in capital, but you can margin this stock 3-to-1, so you only have to put up $975 of capital to make 11.3 times risk. So that is $1,130 of profit for every $975 risked. That is a 115% return on a stock that you held for a day. Really a great trade. All right, let's jump into the Stockscores market scan now. And we're going to build a custom scan to look for stocks between $1 and $10. You know, we often talk about the preset scans, but of course on Stockscores you can also use just the filters and build your own scan. So let's look for stocks that had a volume that was above average. Let's make sure they're fairly liquid, so 5,000 trades a day, between $1 and $10. And let's also look for stocks that were up at least 3% and breaking through 5-day resistance. And I'm just sort of doing this on the fly based on some simple concepts that we find work well. And obviously I've done a lot of research and testing of these ideas. And then it's a matter of checking the charts to see if any of them are breaking from optimistic chart patterns. Now, one of the key things that we're seeing with a lot of the small cap stocks right now is they're breaking up into pessimism. And this is a good example. This is pessimism. You've got people that own the stock at higher prices. They are going to sell into strength. For a stock like this to reverse requires the build of a rising bottom and then the break upward from a rising bottom that breaks the downward trend line. That is what I call a bottom fishing pattern, and it's something to look for right now on these small cap stocks. Now, most of them aren't there yet, but they're starting to get better. And so it's just a matter of cycling through looking for good examples. Now, here's one that's pretty good. So you can see that we have a downward trend line. We have a lengthy bottom, not really a rising bottom, although a slight rising bottom in the last week. And then on Friday, we broke up from that rising bottom. I don't think it's perfect. You can see my stock scores haven't quite risen above 60 yet. So I would give this a 6 out of 10. I think it's a stock to watch. Has a pretty good potential to go higher, but let's see if we can find something better. Now, this scan revealed 62 candidates. I'm not going to go through all 62 just in the interest of time. I just want to show you how the tool can be used to make your own scan to look for the things that fit with your strategy, your goal in finding certain chart patterns. And of course, there's many different filters on the Stockscores market scan that you can combine in many different ways and just experiment with it. If you're a member of Stockscores, you can do some experimentation to try to find the right setups. Here is OBSV. This is a cup and handle break. So there's your resistance. Here is your cup. Here's your handle. And then we broke from the handle right there. That's a pretty good pattern. I wish it had a little more volume. Now, because I can see that there was a big spike in volume in July, I'm actually going to zoom in on this on the 1-month chart just to see if there was any volume on Friday. And there again, I don't really see it. The volume is pretty steady. I would like to see a bigger spike of volume in there. So it's a good chart. I'd give this one a 6 out of 10. If it had stronger volume, I would have given it a 6.5 out of 10, but it's just not quite there. All right, well, that has been the Stockscores market scan. That is a custom scan, but also the Stockscores market minutes. If you've enjoyed it, please leave a comment, subscribe to the channel, tell your friends, tell your enemies. Most importantly, trade well.